Welcome to Money Talks, a weekly feature on FM 93.5 The Berg and WMEG AM 740. Today we will talk just a little bit about money, maybe some of the things you can do with it, how it can impact your life, some ideas on financial planning and investing, and getting the most out of the money you hope to have, already have, or want to pass down. So sit back, relax, listen, and maybe take some notes, as you may have some questions by the time we're done with this edition of Money Talks. Good morning, Dan Joss. How are you today?
I'm doing great. How are you today?
I'm well.
Good.
So we talk about a lot of things here at Money Talks, but I don't think we've talked about some basic stocks and bonds yet.
Let's talk about it.
Let's do that today.
Yeah, there's some parts of the portfolio, I'll call it,
Okay.
not just account. The way I look at investments is a portfolio that could include, 6 or 7 accounts.
Okay.
But in those accounts, we put stocks and bonds
Okay.
and cash and some other things. We'll call those alternative investments.
Alternatives. Okay.
But the basics is cash and bonds. Those aren't volatile like stocks are, and they provide regular income,
Right.
unlike
Okay.
stocks.
Right.
Some stocks provide dividends, but not all.
Okay.
And so I'll say the brakes of a portfolio are cash and bonds, and the gas pedal of a portfolio are stocks.
Interesting. The brakes are the cash and the bonds.
Yep.
And the gas is the stocks.
Because the brakes, or the bonds, are the safe part of the portfolio.
Okay. You know they're solid. You know they're going to stay. Assuming
Yeah.
it's like an A-rated bond or something, or AAA rated bond.
Sure, investment grade bond.
Okay.
And cash is like the highest quality, although it's the lowest paying.
Okay. Because there's the least risk.
Because the least risk.
Okay.
It's the safest. There are levels of bonds, investment grade and high yield bonds.
Okay.
If you like high yield bonds, they're called high yield. And if you don't like them, they're usually referred to as junk bonds.
Okay. Is it really the same bond?
It's a bond.
It's a bond.
It pays income twice a year, and the risk with the junk bond or the high yield bond is you may not get your principal back.
Okay.
So you pay.
So if you don't get your principal back, then it was junk.
Yeah.
If you get your principal back, it was
then
a high
high
yield.
yield bond.
Okay. I see how this works.
That's right. So many advisors diversify their cash and bonds by having different types of bonds. You could have U.S. bonds, foreign bonds.
Okay.
You could hedge the foreign bonds so that you take out currency risk. You can have high yield or low yield bonds, or opposite, high quality and low quality.
Okay.
Short, intermediate, or long-term bonds. Shorter
Gotcha.
bonds, like I'd mentioned, cash is safe. Shorter bonds are safer than long bonds
Okay.
because of the interest rate movements.
All right. That makes sense. Because the interest rates, they go up and down.
Every day they change.
Yeah.
And the guess is what will they be tomorrow, or later today,
Right.
or Friday.
Okay.
So,
There'll be something that could go up, that could go down,
right.
and that won't change.
And bonds I've looked over the last 20 years, since 2000, bonds have outperformed large U.S. company stocks 7 of the last 20 years. So about a third of the time.
Really?
And so as much as we like stocks because they perform well over the long time, they have the volatility, and sometimes bonds outperform stocks because volatility means not only the high returns but also low returns.
Okay.
And we saw that in December 2018, where large U.S. company stocks, lost close to 20%.
Wow.
Well, bonds didn't lose, and you continued to get a little bit of interest on your cash.
So give us just a little more explanation as to what the difference is between a bond and a stock. A stock is when you're, in my interpretation, is when you're saying, you know what, I'll just say Cracker Barrel. I like Cracker Barrel. I'm going to invest in that company and give them some of my money that they can grow their company with. And as their company grows, then the value of my stock goes up.
Sure, you're buying, when you buy part of a company, you're getting a share,
Okay.
and that share has, some percentage of value of the whole company.
Right.
And when the company grows, your share grows.
Okay.
And that share may get a dividend
Right.
if it's a company that pays dividend. And if the company doesn't do well, like Pan Am or Enron or Sears,
Okay.
if they declare bankruptcy, then your share loses value. So that's
Okay.
the risk.
All right.
Is every day that value is determined by people buying and selling those shares, and the value either goes up or down accordingly.
Okay. But with a bond.
With a bond, you're loaning somebody money,
Oh.
and they pay you interest a couple times
Okay.
a year,
Uh-huh.
and then at the end of the bond or the maturity of the bond, they give you your principal back.
Okay. And would these be a bond issued by a corporation?
Could be.
Could be.
United States government has different types of bonds. Corporations issue bonds. Foreign governments and foreign companies
Okay.
issue bonds. Municipalities issue bonds.
Right.
And so there's all types of bonds. And in fact, the bond market is bigger than the stock market, just in terms of the volume that's out there.
Okay.
So-
And they're rated as to whether or not how dependable they are through an A rating and
Yeah, there's different agencies that rate the bonds, and that by that I mean they give that bond a score.
a score.
It's
okay.
a safe bond or it's a risky bond.
Okay. But none of them are James Bonds.
No,
Okay. I just had to go there.
that's good.
Okay.
It's good. No, they're not. And I say risky bonds. They're not as risky as stocks. Although you could lose the value.
Right. Okay. Well, interesting. So, does Dan Joss with Joss Financial, do you sell bonds?
I don't sell bonds. I recommend bonds.
Okay.
I recommend bond funds or ETFs. There's all types of ways to get bonds in your portfolio,
Okay.
and I'll help you set that up when I'm developing a recommendation for you by determining how much risk you want to take, and that in some way will help us figure out how much of the break we use or how much bonds we have in the portfolio to control the risk of the whole portfolio.
Good. Well, I always find it fascinating that we talk about all these different things, and you don't sell these things. You don't sell the stocks. You don't sell the bonds. You just share your expertise.
Yep, share extra. Some clients hire me to manage their portfolios, so
Okay.
I'll manage that. But I'm always inclined to educate to make a better investor.
All right. And if someone wishes to receive some of your education, how should they get in touch with you?
Well, they can call me 757-903-2127.
Okay.
They can go to my website, jossfinancial.com, and they could get a score on their financial life. I have a little quiz, financial life stress test, and 5 or 6 questions, and see where they stand.
Excellent. All right. One last question.
Sure.
Are any of these bonds 007 rated?
I don't think so, no.
Okay.
It's usually letters, A, B, C.
Gotcha. All right. Thank you very much, Dan Joss.
Thank you.
Money Talks is a weekly program presented for the listener's benefit and entertainment. It is provided at no cost to the listener, and the ideas, opinions, and comments are not to be construed as legal advice, tax advice, investment advice, or other advice specific to the listener. Listeners are encouraged to seek the advice of a licensed professional or other qualified party when dealing with financial, legal, tax, medical, investment, insurance, taxidermy, plumbing, electrical, carpentry, real estate, chiropractic, veterinary, oral hygiene, hot air ballooning, etc. We have given you some food for thought. Now, call a licensed professional such as Dan Joss at 757-903-2127. Thanks for listening, and remember, failing to plan is planning to fail.